Good day. I'm Jim O'Neill from somewhere in the universe. I am fortunate enough or unfortunate enough to no longer be working full-time in the world of finance, but I remain actively involved after a long full-time career, much of it at the one and only Goldman Sachs. I'm very fortunate to be chairing this panel on the topic of whether banking and finance can play a role in establishing greater trust and accountability for online security. I should say straight away, I'm a very good friend of the chair of the CEO of CallSign, Zia Hyatt, and a good mate of his, despite him being a Liverpool football fan. But we're good pals, and it's a great pleasure to be with my fellow guests here, who I shall now introduce very quickly. In no particular order, we have, first of all, Judy, who is currently the CEO of Consumer, Private and Business Banking at Standard Chartered. Jonathan Larsen, who is the Chief Innovation Officer for Penang. Carlos Menendez, who is the President and Commercialization Officer of Mastercard. And Stuart Riley, who is the Global Head of Institutional Clients at Citi. So welcome all. Let's get right to it, and I'll ask you the first general question, and then pending how each of you answer, I will take it on from there. So right to the core of the theme of our panel: can banking and finance, can it really play a significant role, especially for online security? So why don't we start with Judy?
Well, hi, everybody. I mean, very central to the financial services industry and very central to the bank, trust is critical to our relationship with clients, right? It can be digital trust or just trust in general. I absolutely think banking on that asset of trust, that we can play a very critical role in enforcing and improving the digital trust, given the big development in this whole shift to digital interactions. I think I should start with, what is the real definition of digital trust? And what are the factors that really contribute to building that trust with our users? And I think, for us in the banking industry, digital trust is just not about, sort of ensuring that we have a secure infrastructure. I think now that is really table stake. It is really our ability to build that confidence in our users so that we can provide not only that security, but privacy, reliability, and more importantly now, that ethical practices through our people, through our technology, through our processes. And that's something we're very focused on. The truth is, as I said, digital or non-just digital, trust is central to the success of financial services like ourselves. And when we win our clients' trust, obviously that's good for business and that's also good for the community. So there you go.
Thank you, Judy. Moving on, Jonathan, what's your angle?
Well, I think first of all is to echo Judy's point. You're not going to bank with an institution that you don't trust. It's as simple as that. I actually think the banking industry around the world does a reasonable job of providing basic security, infrastructure, and identity verification. I think we've seen a lot of progress. I think for, let's say, since Apple and Android were able to incorporate facial recognition, for example, into their own authentication platforms, I think that the experience of logging on to online banking in a secure way has dramatically improved, and we've taken a lot of friction out of the process. And I think that's pretty universal. I think that things like, just in our day-to-day lives, things like 3D Secure for Visa and Mastercard, and in their various iterations, sometimes it's a one-time PIN, sometimes it's a live link to your mobile app where you can just, with one click, validate a transaction. I think these are all improvements, but I think that while trust is there, and while the infrastructure kind of works and is functional, I think it remains extremely clunky overall and highly fragmented. And I think digital identity and the security around that identity remains one of the really important frontiers in our industry. And I don't see anybody in either the tech industry or the finance industry who has really addressed that full on at this point in time. And I won't, that's probably the whole subject of what we're talking about. So I won't, we can come back to that in subsequent comments. But I think that just to kind of illustrate why it's an issue, if you try and open a private banking account today, or frankly, any banking account, there is a long, complicated, paper-driven process. If you open a corporate banking account, particularly if it's multi-jurisdictional, in many banks, you're talking about months, especially if there's a cross-border element involved. Even in the most supposedly sophisticated banks in the world. And for those of us that bank with multiple institutions, or for corporates that bank with multiple institutions, each one has their own set of protocols for both identifying who you are in the first place when they set up your account, and then validating who you are throughout the relationship. I mean, we could go on for a long time, but I'm very sure everyone would recognize what I'm talking about here. So I think that we do have trust. We've got processes that basically work. Some are actually quite good, but they're fragmented, they're partial, and I think this space is extremely interesting and offers extremely fertile opportunity going forward. So let me leave it there for now.
Well, you've certainly raised quite a few issues, Jonathan, there that I intend to come back on. But before I do, let me perhaps go to Carlos next.
Thanks, Jim. I think, very briefly to build on the other two, digital trust requires financial trust in the sense of to actually have a digital identity that is portable and shareable around the world. One of the main reasons for that is going to be financial transactions. So they both need to develop together. They can always be improved, but I think, having these institutions around the table, institutions like Mastercard, share data, share best practices, and sort of fight against crime globally, which is really the risk to trust. It's not the players themselves, it's the outside agents.
And Stuart.
Yeah, Jim, I think my colleagues here have covered a lot, but going back to something you said at the start, there's no doubt over the last couple of decades, ethics have sometimes been called into question, the ethical response that banks have had to situations. But actually, trust has been there, and people still leave their money with banks. They still feel safe about leaving their money with banks, in my opinion. So there is that element of trust with the institutions. What I think is really important, though, about why banks play an important part on digital identities is because we are the institutions that have a true relationship with the individual. What I mean by that is we know who they are, we have proper information about them, they're KYC'd, and we have an ongoing relationship, a dialogue about their lives. And that's something that's quite unique if you think about the companies in the sort of big tech world that we probably do trust, but we actually have no formal relationship with them. We have an email address, we have a telephone number at best. And so I think banks are in a very different position with regards the amount we know about an individual and the relationship we have with that individual. And so it's a really good starting point to develop that digital identity that we can really kind of build upon, knowing actually who that individual is.
Let me delve a bit further on this core theme before I get into some of the specifics, especially relates to what Jonathan asked. But maybe I'll stick with you, Stuart, first, because as I still find myself listening, and let me be characteristically blunt as I often am. Can banks truly deliver trust in this space, given that the past 20 years has tested, as we all know, and I was in an institution myself where there was many question marks about aspects of societal trust. What do you all think about this tricky issue? And I'll throw in one of the other questions about it you can expand on. Is this an opportunity to actually regain some of that real trust that one would really hope to be at the core of these relationships? But Stuart, why don't I'm not going to necessarily go in reverse, but Stuart, I'll start off with you this time.
Yeah, thanks, Jim. Look, I sort of somewhat reiterate my earlier comment. I think there's definitely an element of trust still with banks, in my opinion. Now, that's not to say we can't do better and build upon that, but people still leave their money there, which is very, very important to individuals. Their assets, we look after them, we have custody businesses, etc. So I think there is an element of trust there, but I don't think it's just the banks on their own that will enable this facility to be set up where someone can leave their digital identity and it be the authorized identity that everyone in the world would recognize. I think actually to do that, there'll be partnerships involved, and there'll be partnerships, whether it be with governments in terms of how governments approach digital identity in their countries, and there'll be partnerships with companies like CallSign who have the ability to deploy and overlay technology and technology innovations that maybe the banks haven't got or won't invest in or can't invest in on their own. That means that the combination of those types of innovative technologies, the government layer and the human individual layer with the relationship with the bank, it's when you bring all of those together that I believe you can actually have something that's going to be truly systemic and everybody would rely on and buy into. And so I think banks play a really important part of that, but I don't think it's banks alone. I don't think banks on their own could really solve for that whole problem. And if they tried to solve for that whole problem, then I think there would be question marks, not just about trust, but just about whether anyone wants, a single institution to have everything about their identity and be the sole owners of their identity. And I think that gets back into some of the issues that are going on in the big tech world today around data ownership and data privacy and how these things are looked after. So I think banks play a really important role in it, but it's not exclusive to banks. I think we just provide an important part. And as I said earlier, today banks already do a lot more when it comes to things like KYC. So the data that we have about customers to know that the individual who they say they are, than almost any other institution or group of institutions do. So I think we just got a good starting point. And from there, I think to Judy's point earlier, we can build that trust and gain further trust in the individuals.
Carlos, let me come, given where you sit with Mastercard and what do I know, but in a way, particularly given the unique nature of Mastercard, how do you think about the question I throw in here? And given where you've come from before, at least, especially.
Yeah. Look, I think it's spot on. Not one institution or network is going to have every customer person on the planet or business, and so you are going to need a series of partnerships and a network that will have standards and rules and risk profiles built in. And so the key part would be how everybody contributes and how those standards and information are managed so that you get to a better answer at the end. So I do think the banks are critical, but without a doubt, we're going to need to connect governments, as Stuart said, and also networks to facilitate the flow of information. Because it's not just about creating the digital identity, it's about it being useful. And so you have to get it out of independent systems. You have to have it in a way that anybody can access it quickly.
Judy?
Yeah, I absolutely agree with that. There are clearly challenges. I think, we talk about the fact that there are still no universal standards when it comes to regulations and policies. What is digital trust and what does that entail? There are different expectations. As we operate in many countries, our country infrastructure and capabilities are quite different. In Singapore and Dubai, for instance, we have smart national ID, which makes a lot of doing eKYC very simple, right? But in many other markets where we want to actually offer the same kind of frictionless onboarding experience that Jonathan talked about, it's quite challenging in doing that. So I do think that there are different maturity depending on the markets. Also, more importantly, client sophistication is also quite different, and that whole culture awareness. I think the standards that we see in our colleagues in Europe is very different from Asia. So all these different sort of factors contribute to different expectation to achieve that level of digital trust. And, you know, and on top of that, right, it's the emerging technologies. I know I'm being quite pessimistic. There's a lot of factors here. You know, if you talk about cybercrime, blockchain, a bank like ours, we've been around, we're investing huge amount into cyber, into new technology stack. But the truth is, you know, we have complex legacy systems that are not always equipped, right, to serve this whole digital trust, to deliver that client experience, that quick onboarding, that frictionless KYC. We are investing. It does take time, and we have to accelerate that. But to me, knowing these challenges that we're talking about today already is, to me, we know the problem statement. It hopefully gets us halfway through what we need to do. And I think what we need to do is we need to continue to adopt new technology. We have to maintain a much more dynamic digital strategy and be much more agile instead of big technology project like the ones we used to do, I think 10, 20 years ago. I think we also need to really understand what is expected of our clients in terms of what that means in terms of trust. And, you know, Jonathan referred to some of that, right? And I think more importantly, it comes down to people. We have to continue to raise and educate awareness on ethics we talk about around what is that digital trust within the bank. But absolutely, it's something we're very focused on. We're not doing this just because it has to be compliant to meet regulatory standards. We have to do this because this is critical in our survival, in our ability to continue to, I think, compete. It can be a competitive advantage, or it can lead to, you know, very bad consequences if that trust is not there or destroyed.
I want to pursue in a sec. I'll start with this with Jonathan, as well as Jonathan, throw in your own additional response to what the other three said on my question. But to what Judy's just intimated, let me push it more specifically. By and large, are financial institutions what sound like intense efforts in this space, an attempt to stay up to the game of what the world is throwing at you, or actually is it something that's seen as a source of new growth?
Yeah, well, for me, I think the first comment to make is that, you know, where I think some of the participants on this call are using a mobile, I certainly am, I'm using an iPhone. We're now 15 years into the iPhone revolution. Let's call it the smartphone revolution, because iPhone's only whatever, 30% of the market share or something like that, 20, whatever it is. But, you know, there's no doubt that mobile has had a transformational effect on the digital economy and the consumer economy globally. And that, coupled with the advent of cloud computing at scale, universally available, which really took place around about 2010. I think by the time, you know, AWS had a really robust global offering somewhere around that period of time. Those two things, there's a number of other elements that sort of make up the picture, but those two elements are really this transformative phenomenon that have redefined what digital means and what the digital economy means, and indeed what the consumer economy means. It's interesting to me that if you talk about companies like Apple or Netflix or other global digital providers, Uber would be a great example, who exist in dozens, if not hundreds of countries, who have more or less exactly the same user experience across all of those countries, who are entirely digital. Amazon itself would be a fantastic pioneer example, who themselves have had to go through multiple iterations of technology sort of to remain current and get where they are. But if I contrast those, let's call them digitally native companies in this era with basically the entire regulated financial sector, you know, the difference is still night and day. In banks, overwhelmingly with legacy systems, your data as a customer is still kept in an unencrypted form in flat files, and it is guarded by perimeter security the way it was back in the 90s or the 80s. And that just doesn't exist in the internet world anymore, where everything is encrypted, in transit, and at rest. Data is sharded. You can steal whole databases from people like Google or Amazon, and you'll never get the whole picture, even if you could decrypt it, etc. The banking industry still views this new paradigm of technology as either an overlay or as a peripheral add-on to their legacy core. And I think that's, at the center of the problem here. Banks are indeed spending enormous amounts of money, but most of it is actually retrofitting functionality to, very inefficient and fundamentally outdated technology that just happens to be entrenched and in some places intractable and extremely expensive to run. So I think that's sort of one of the big kind of underpinning issues that the financial industry faces. And I think the financial industry collectively is a long way behind the pace in transforming itself in that respect.
Carlos, do you share that? I mean, that sounds quite, from a sort of growth perspective, that sounds a little bit pessimistic, but I don't know why I'm saying, I'm guessing from a Mastercard angle, you might not see it the same.
But we don't see it the same, and we don't see it the same for banks either. I mean, digital is a growth opportunity in terms of consumers and businesses doing and selling more. And Mastercard facilitates that because you can safely use your money anywhere. I think it's also important to note that digital is a tremendous cost savings, not just to the merchants, which Jonathan mentioned, but to the banks and to Mastercard, et cetera, because the onboarding with a digital identity and all the work now done in terms of acquiring customers is a lot cheaper, the servicing of these customers, and the facilitation of international trade, which before, involved a chest of gold, has come a long way in allowing us in a digital world to travel everywhere and be confident that we can buy and do what we need to do.
Judy, I saw you nodding your head when Carlos started answering me. I guess that means you tend to take Carlos's angle rather than Jonathan's. Is that right?
No, yes, I mentioned in what I said earlier. We are dealing with some, pretty complex legacy system. But at the same time, the key here is we are keeping the data secured and protected under law, but also under the client expectation. That's number one. We are continuing to apply new technologies such as encryption. That's important, and we're doing that. Yes, we may have more traditional infrastructure, but we're also, as I said, adopting new technology every day to stay compatible to client needs and digital native organization. And we must do that regardless of organizational nature, because that's the only way we can fulfill client needs. We are also building new tech stack, greenfield tech stack, as we launch digital banks, and we've done that. Absolutely, there are things that we need to do more, but I would challenge a little bit what Jonathan is sort of characterizing us as being, this sort of 1990 infrastructure.
I'm guessing, I can't help saying that, even though I'm not here to market our event organizers' capability, but I'm pretty sure when Zia listens to this discussion, he'll be pretty happy about all this, thinking that there's a great opportunity for call sign to help us all along the journey. But Stuart, what's your angle on this?
Well, I feel like we're ganging up a little bit on Jonathan here, but I'm going to disagree with him too. So I'll give you two examples or reasons why I think tremendous growth is available off the back of this. Number one, if we look at history, every time any market has gone digital, we see volumes explode. And bear in mind, though, as they do that, the transactional value comes down. So you tend to see in any market that as we digitize it, you get more participants in the market, more people taking part, greater number of transaction because the transaction costs are lower. But of course, because of that, it does bring the transaction volume down. People aren't just doing the big transaction now. You get down to the individual level, the consumer level transaction. So you have to have technology that is fit for a very different purpose. Suddenly that technology has got to scale in a way that it didn't used to have to scale. So there is a cost that comes with that and a complexity that comes with that. But every single market that has gone digital goes through that paradigm, and there's an awful lot of markets in the world that still haven't fully gone digital, and are still on that, going through that transition. Clearly, digital identities are going to make many of those far easier to digitize. The second thing I would comment on, which is possibly even more important, is that there are markets today, and take obviously digital assets is going through a pretty volatile period at the moment. But if you take digital assets, the banks don't really do much in digital assets today, not necessarily through a lack of desire, but actually because we can't really transact in them. We can't transact with people who on the other side, we don't know who they are. Regulators don't allow that. We wouldn't want to do that. And so there are many markets where we simply can't participate until we have some way of validating who it is we are transacting with, and we know that they are good, it's not illegal activity, etc. So that in itself will open up a lot of other markets as well, in terms of the things that today are in some way anonymous. If people are willing to assign their digital identity to the ownership of the assets they have on those platforms or in those ecosystems, then suddenly it would be far more reasonable or understandable if we were to partake in them. So I think there's two solid reasons why we'll see a lot of growth off the back of this. But a third thing is, irrespective of growth, I mean, it's just a necessity to have an environment, a system that's going to work electronically, globally, and everybody can transact together. We clearly need some mechanism whereby we can know who we're dealing with.
So that brings me to one of the last two questions I think I've really got time for. We're sort of well on past 20 minutes, but before I do that, Jonathan, do you want to throw in some defense of this combined attack on?
I don't think there's anything to defend. I don't disagree with my three friends and former colleagues in the least bit. I'm an enormous proponent of the opportunity for all of us for more digital services, more digital engagements, and more digitization of what we do. I was simply pointing to the reality that most of the financial system has a long way to go to achieve any semblance of being a digitally native entity and experience for their customers. And I think that's all opportunity going forward, but I think it's an opportunity that comes with probably a degree of urgency that is greater than many in the financial industry perceive.
So let's stick with that with one of my last two. What in this regard or any other regard would you most want from governments in the unlikely event that all governments acted together in this confusing world? Jonathan, start with you.
I think Judy alluded to this in her first comment, and I think that governments do have an important role to play. The wait and see attitude for governments on cloud computing over the last decade hasn't been especially productive. I understand why regulators are concerned about outsourcing in general and about commingling of data in common data centers. But I think the regulators have been a bit slow to kind of really understand what cloud computing really is and what value it can bring. That is the paradigm of the future. There's no doubt about that. And I think that introducing consistent standards, especially for banks that operate in multiple jurisdictions, would be hugely helpful. I think that introducing digital identity standards, and this is probably beyond financial regulators, it's more at the level of the legal system in countries, but making sure there are standards, legal standards for digital identity, for digital signature, for digital validation. We still use platforms like DocuSign, which are absolutely fine, but what they are rather very successful as they are, not to take anything away from them, but they're rather clunky replicas of the paper processes that they're supposed to replace, as opposed to genuinely digitally native authentication modalities. And I think it would be helpful to have frameworks that are consistent across jurisdictions that facilitate that. To give two examples.
Judy?
Yeah, I think as an industry, because I do think we are ahead, especially for us when we operate in many markets, it is also our role to educate or to work with governments, right? And we are ahead of them. And in many governments, in many countries, that governments are already playing an important role. Governments will have to continue to the challenge of achieving that right balance between a strong regulation and hopefully leaving some sufficient ground for experiments in order to create that right appetite for innovation. And I don't see that balance is always right in some of the markets where we operate.
Now, so lastly, Carlos and Stuart, same. I mean, you guys two both work in massively global environments, is it, I mean, another angle for you guys to throw in perhaps, is it feasible to expect governments in this sort of bifurcating world to do similar things that you desire in this space?
Okay, if I may, a second, Stuart, I think governments can work together, and there are systems today that work across governments, so we can build on those. Mastercard is clearly one of that. I would also add that as the governments create a level playing field, not just for banks, we should also be thinking of new entrants. Some of the recent blockchain promises and the such, particularly given the recent turmoil in the market, are indicative of a need for sort of regulatory protection for consumers and a level playing field across everyone. The last point I would bring out that I think is a harder to solve one, but as important, is that there are a lot of people on the planet who are unbanked. And so the government needs to think about digital identity for them too, in terms of how they come into the new increasing digital world.
Right, I guess in India, been a huge example in that sense, I guess, right? Stuart?
Yeah, actually, maybe I'll put just a slightly different take on it. I agree with everything that's been said. Governments will play an important part, and I think they already are. If you look at the number of countries that are looking at digital identity from a government perspective, it's great. But what I would say is that it's unrealistic to think that all the countries around the world are going to collaborate and come up with some common standard. I mean, we'd be lucky if 10 did that, let alone the countries that Citi alone operates in, 100 countries, 80 that we've got physical presence in. So what I see is an important part that we play is actually simplifying that from the customer's perspective. So what I mean by that is, if you're a corporate and you're transacting between borders, you don't need to necessarily, or you shouldn't have to get into the details of understanding all of the world's different identity systems. We should play a part in normalizing that for people. And I think that's one of the very important aspects that not just Citi will play, but the financial system as a whole is, how do we simplify that for the world? How do we make sure that you can seamlessly transact between individuals in different jurisdictions and geographies without them all having to understand their different digital ID systems or different protocols that they use? And so, we, in a way, I think one of the key jobs that, we at Citi, from an institutional point of view, have always felt is that our job is to simplify what is complex in the world because of the number of different standards around. And I think this will be no different. I mean, there's no way we'll end up with a common digital ID in our lifetimes. And so, there's got to be institutions that play the role of sort of normalizing that.
So in that regard, last question, and I guess try to be as brief, given we're probably overshooting the time really, but it's fascinating aspect touching on things you've said. But given the ongoing turmoil that seems to be escalating as 2022 goes by, is the market volatility or weakness in bonds and equities and what it implies, together with the sort of seemingly complicated world of trying to have true global governance, is that making all of this harder, or is it something you just got to get on with and ignore? Carlos, start with you.
Our view, and let me echo some of Stuart's comments here, our job as international organizations is to simplify the world and to make it seamless and protected in the background. I think turmoil is just part of the world. There's always something going on, and we have to prepare ourselves and our systems to thrive in that space, to look for opportunities and to protect our customers. I don't think there's an easy answer, but there never is. And so it's really a function of how do we build that resilience? How do we use systems and programs out there to facilitate it and make it better for ourselves and everyone in the world?
I love that answer. Never let a crisis go to waste. Jonathan?
Look, I think that it probably doesn't directly affect some of the identity issues we're talking about, or the kind of internal institutional infrastructure and process issues. I think what it can affect, if it's sustained, is a lot of the innovation in our industry today is coming from outside of legacy institutions, from partner organizations, and CallSign could be an example of one of those. And I think in the last decade, you've had a pretty constructive environment for entrepreneurs to be able to create value propositions that can be helpful get them funded, and get them scaled if they're successful. And I think clearly we're in a tighter capital environment for early stage and even growth stage funding. And that may create a constraint and may slow down some of the availability of solutions that could be helpful here. So that's one thing to watch. And I guess in some respects that might be an advantage for companies that are already pretty well established, have a good client base, and have capital to invest.
Judy?
Yeah, I think we have to just get on with it in a way, as you know, clients are getting more sophisticated every day. You know, and we have to continue to drive that digital trust, not only for commercial gains, but also, you know, as the society gets more complex, there are great geopolitical challenges. It's our role to also use our digital capabilities to help societies with broader purpose, protecting the young and vulnerable on a lot of the fast-growing digital economy, accelerating, you know, lifting participation, and I think we can be, you know, force for good. It's a very challenging world.
Thank you. Stuart, lastly but not least, final word to you.
Yeah, thank you. First of all, I guess, you know, part of what we do is manage volatility. You know, actually, in some ways, the market volatility is what parts of our business are designed to help our customers with. So, you know, there are parts of our business that will do very well in this environment. More importantly, at least for Citi, you know, there's no sign of it affecting the amount that we're investing in technology, in upgrading technology, and investing with partners. And actually, I don't really see that changing. I mean, actually, we're more constrained by the amount of people that we can hire into technology, the amount of money we can deploy into it. We're not constrained by the money. We're constrained by the places in which we can deploy the money at the moment. It's incredibly hard to find the right engineers, the right partners to solve these problems. So, you know, I think that demand is still there. I don't see that going away. I think everybody knows that they need to digitize. If they don't digitize, their businesses will be history anyway. So, you know, I don't see at the moment a significant change that will slow anything down.
Well, thank you for that, and particularly all of you for taking what could have been a pessimistic question to actually an opportunistic place for the industry and for the role of using yourselves to help enhance societal trust, perhaps, with these challenges of security. So let me wrap up. So thanks to Carlos, Judy, Jonathan, and Stuart. Fascinating discussion. I'm sure we could have gone on for double the amount of time, but these guys need to make sure there's space for the other interesting panels that we're competing with. So thanks all.